Welcome, dear traders. You are watching a recap of the Asian session on September 26. Asian stock indexes opened lower following yesterday's weak performance on Wall Street. Risk sentiment fell again after Moody's warning. In addition, the news about the liquidation of a real estate developer China ocean-wide and the ongoing problems of Evergrande added to the gloomy sentiment. Analysts of one of the largest US-based rating agencies have issued their publication on the possible consequences of a crisis in the US government. The suspension of the legislative body may be caused by renewed contradictions between the Democratic president and the Republican majority in the House of Representatives. On the eve of elections, Joe Biden will not agree with the budget cuts. For example, it will clearly not appeal to future voters to eliminate food benefits for nearly 7 million low-income women and children. Meanwhile, the two parties have already agreed to compromise. However, it's possible that Republicans, led by House Speaker Kevin McCarthy, will try to cut government spending even further. These proposed cuts would require the approval of the U.S. Senate, where Democrats have the majority, and thus the Senate is expected to reject the cuts. If Democrats and Republicans fail to reach an agreement, there is a risk of a partial government shutdown as early as October 1. However, the US dollar does not seem to fear this prospect. The US currency continues to strengthen. Against the G10 group, the greenback moved into a net long position for the first time since November 2022. On a Tuesday, the US dollar index against a basket of G6 currencies stood at 106.20 points, the highest level for the last 10 months. Along with the greenback, US Treasury yields also rose. On Tuesday, Treasuries hit a new 16-year high on the back of comments from the Fed and actions of other major central banks. The world's leading central banks seem to be ready to keep rates elevated for longer. On Monday, Federal Reserve Bank of Chicago President Austan Goolsbee said that the U.S. Central Bank was probably nearing the point of a stable interest rate. However, the policymaker also warned that the Fed's rate was likely to be at a higher level than the market is used to. With this hawkish outlook, the US dollar began the Asian session in a bullish range of 105.90 and 116.10, hitting multi-month highs against the euro, pound and yen. As a result, the dollar-yen pair left the consolidation area today and moved into the uptrend within the range of 148.70 and 149.20. With the risk of higher US Treasury yields in the near future, the yen is expected to continue to fall as the US dollar strengthens. During the Asian session, the yen dropped to an 11-month low against the greenback, moving to the area of 149.20. The weakening national currency has brought the Japanese economy to a critical stage. Policymakers will likely have to choose between stimulating spending or spurring wage growth. Japan's Finance Minister Shinichi Suzuki raised this issue today, and yesterday Bank of Japan Deputy Governor Shinichi Uchida urged to remain patient in a monetary policy easing and continue to closely monitor the currency market. These speeches were seen as a dovish, undermining the yen. As a result, markets will closely watch the Japanese regulator to implement a possible intervention in the forex market. Most likely, the steep decline in the pair's quotes 248.80 that we saw today in Asian trading was just the result of the intervention in the currency market. While the safe haven US dollar is strengthening on the back of economic uncertainty, the Australian dollar is retreating on the back of a falling risk sentiment. Even rising oil prices, which usually help commodity currencies counter the all-monthly greenback, did not support the Aussie today. As a rule, elevated energy prices spur inflation. Thus, a high inflation forces central banks to maintain hawkish stance for longer, and the only way for the Aussie to get out of this vicious cycle is to go into bearish territory. The Australian dollar did not today in Asian trading. Against the greenback, the currency slumped to the area of 0.6398 and 64.32 and managed to recover to 0.6410. And the New Zealand dollar followed the Australian dollar scenario at the beginning of Tuesday, and today the Kiwi also declined and recovered within the range of 0.5936 and 0.5975. Against the backdrop of high inflation in the country, the currency may receive support from the decision of the country's regulator. The meeting of the Reserve Bank of New Zealand will be held on October 4. However, the Kiwi started this week following other commodity currencies. In the Asian session, the New Zealand dollar closed in the bearish territory near 0.5964. The Indian rupee failed to resist the US dollar at the beginning of this week. The dollar-rupee pair is rising for the second day in a row. During the Asian session, it reached a multi-day high near 83.20 today. Since the beginning of September, the euro-rupee pair has been in a bearish range over 88.20 and 90.20. However, the decline was relatively modest as the strengthening of the greenback and still sensitive capital outflows from India were offset by currency interventions by the Reserve Bank of India. More generally, the bearish pressure on the Indian currency was on the rise in July. At that time, the country increased its oil imports. This coincided with a rise in the global energy prices. The result was an increase in the number of rupees sold for oil and gas imports, and the Indian regulators' high interest rates offset the drop in the rupee. And that's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is the key to success in your trading. See you online soon.